There's a lot to think about when you're a first-time home buyer. How much can you afford? Where will you live? What kind of loan should you get? It can be overwhelming, but don't worry. We're here to help. Hello everyone, welcome to Finance Wisdom. If you are new to this channel, do like and subscribe to this channel. This video will discuss first-time home buyer, how to manage your loan. Managing your loan can seem daunting. There are many things to think about when you're a first-time home buyer, but with a bit of preparation, you can make the process much easier. One of the most important is how to manage your loan. But first, you should have a good understanding of what a loan is. A loan is a debt that must be repaid with interest. The primary types of loans are mortgages, auto, and student loans. Homeowners usually take out mortgages to buy their homes, while people who want to purchase cars typically take out auto loans. And finally, students usually have to take out student loans to finance their education. What are the different types of first-time home buyer loans? A few different types of first-time home buyer loans are available, including fixed-rate loans, adjustable-rate mortgages, and government-backed loans. Each type of loan has its pros and cons, so it's important to compare your options before deciding which one is right for you. Fixed-rate loans. As the name suggests, these loans have a fixed interest rate for the life of the loan. This means that your monthly payments will never go up or down, no matter what happens with interest rates in the market. The downside is that you may end up paying more in interest over the life of the loan if interest rates go down. Adjustable-rate mortgages. These loans have an interest rate that can change over time, which means your monthly payments could go up or down depending on market conditions. The upside is that you may be able to get a lower interest rate if rates go down after you take out your loan. The downside is that you could pay more interest rates if rates go up. Government-backed loans. These loans are backed by the government and typically have more favorable terms than other types of loans. The FHA loan is the most common government-backed loan for first-time home buyers, which has a low down payment and flexible credit requirements. The downside of these loans is that they usually have higher interest rates than other types. Whatever loan type you choose, compare offers from multiple lenders to get the best deal. Compare closing costs and other fees before deciding on a loan. And remember, the lowest interest rate isn't always the best deal. Which type of first-time home buyer loan is right for me? The type of loan right for you will depend on your circumstances. If you have a good credit score and a steady income, you may qualify for a conventional loan with a low interest rate. If you have a lower credit score or are unsure about your payment, an FHA loan may be a better option. And if you're looking for the most favorable terms, a government-backed loan may be your best bet. Whatever loan type you choose, compare interest rates and terms before you decide which one is right for you. How to manage your loan during the buying process. When buying a home, staying on top of your loan is essential and ensuring everything is on track. Here are a few tips on how to manage your loan during the buying process. First, make sure you're getting pre-approved for a loan before you start shopping for homes. This will give you an idea of what you can afford and help narrow your search. Next, once you've found a home you like, be sure to get a loan estimate from your lender. This document will outline the estimated closing costs and monthly payments for the loan. Finally, once you're in contract to buy a home, stay in close communication with your lender. They will be able to update you on your loan status and let you know if any changes need to be made. By following these tips, you can stay on top of your loan and ensure everything goes smoothly during the buying process. If you like this video, don't forget to like and subscribe to this channel. What should I do if I can't afford my monthly payments? If you can't afford your monthly payments, the first thing you should do is contact your lender. They may be able to work with you to lower your costs or extend your loan term. If you're unable to reach an agreement with your lender, you can look into enrolling in a loan modification program. These programs are designed to help borrowers who are struggling to make payments. You will need to provide documentation of your income and expenses and proof that you have attempted to work with your lender. Once you have submitted all the necessary paperwork, a decision will be made on whether or not you qualify for the program. If you qualify, you can make lower monthly payments that are more affordable for you. Several government programs can help, including the Making Home Affordable program. What should I do if I'm having trouble making my payments? If you're experiencing financial hardship and are having trouble making your loan payments, there are several things you can do. First, contact your loan servicer to discuss your options. They may be able to offer you a temporary payment plan or modification. You can also look into refinancing your loan or consolidating your debt. If you're still struggling, you may be able to deferment or forbearance your loan payments. These options will allow you to stop making payments or make reduced payments temporarily. However, interest will continue to accrue on your loan during this time. You should only consider these options as a last resort. If you're having trouble making your payments, the best thing you can do is contact your loan servicer and explore all of your options. How you manage your loan can have tax implications. If you have a loan, you may be able to deduct the interest you pay on that loan from your taxes. This is especially beneficial if the loan is for business purposes. To remove the claim, you must itemize your deductions on your tax return. It's essential to keep good records of the interest you've paid throughout the year if the IRS audits you. You'll need to provide proof of the payments you've made. Not all loans allow for the deduction of interest payments. For example, personal loans generally don't qualify. So if you're considering taking out a loan, ask about the tax implications first. It is important to remember that you are not alone when it comes to first-time home buyer loans and asking how to manage your loans. There are many resources and organizations available to help you through the process. Speak with your real estate agent, lender, and housing counselors to get started on the right path. And as always, be sure to consult with a tax professional to maximize your deductions. By following these simple tips, you can confidently manage your first-time home buyer loan and enjoy the process of becoming a homeowner. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and goodbye.